Hey guys, Corey here. Today we're talking about Sofi, so stick around because I'm going to explain to you guys some really key facts and points on Sofi and why this stock has a high potential to go parabolic and double in price in the next 6 months. It took me a while to achieve financial freedom. I went through a wicked divorce, cost a lot of money, had to work a lot of long hours to go to college, learn investing, and I finally achieved that. I have 2 kids, and with the divorce and all the financial impact it had, I was able to achieve financial freedom, and I don't have to stress out about money. I know it's a really important factor. Maybe you guys are in the same situation as I'm in. I'm sure some of you guys are divorced or have kids. You may want to retire early. You want financial freedom. I really want to share that with you guys with my system and show you what works, and I really want to help you guys to be able to achieve your goals. This way you can live a better life just like I've been able to do. And I told myself that once I achieved financial freedom, I would help spread that wealth with others. I'm so passionate about the market and trading and finance in general, but I'm even more passionate about teaching you guys and helping you to achieve your financial goals. Sofi started 2024 off on the right foot when they reported Q4 2023 earnings and GAAP profit for the first time. The company also increased banking services, which increased its user base. Sofi aims to add about 2.3 million members to their user base in 2024, with a younger demographic targeted. Reporting a 34% revenue increase, Sofi anticipates that in Q1 2024, it will see a net GAAP of between 10 and 20 million. Deutsche Bank has stated multiple times that their price target for Sofi is $12 a share. Let's look at Robinhood markets. They've been peaking between $15 to $19 a share, and they actually aren't as good of a fintech as Sofi. Both Robinhood and Sofi have similarities in their EBITDA, GAAP, and earnings. Robinhood's revenue generation is far less consistent than Sofi's. Robinhood doesn't have as many financial services as Sofi does. When you sit here and you look at a fintech like Robinhood, their stock price is 3 times higher than Sofi, even though Sofi makes similar profits, if not more. In fact, Robinhood's free cash flow is negative 35 million in Q4 2023, whereas Sofi's free cash flow is 178.88 million. They literally are free cash flow positive and profitable, and Robinhood is not. Yet their stock price is $18 or $16 now versus $7. The Deutsche Bank has a target of $12 a share for Sofi. This was driven by a convertible debt issuance aimed at reducing effective interest rates, although with a slight rise in outstanding shares. Despite shareholders' concerns of possible dilution, Sofi management assured investors that their EPS earnings per share would not be affected due to savings on interest and preferred dividends. That's how they were able to do this, which is a pretty big move in my opinion. Sofi also attained a full banking license in 2022 when they acquired Golden Pacific, offering stable funding. Analysts around the world see Sofi as a leader in digital lending and neobanking, mainly focusing on prime consumers and enhanced unit economics. Sofi is a really good stock in my opinion, and I think that it is an absolute buy at $7. As soon as the feds cut interest rates, Sofi will go up, up, up. That's one of the things holding back fintech right now and a lot of other legacy banks like Bank of America, which is a great stock by the way. And not only that, Wells Fargo, another great stock. Not as good in my opinion as Bank of America, not quite as stable, but both great legacy bank stocks. However, the interest rates, the Fed rates right now need to be cut a little bit more because where they're sitting, it's kind of hurting fintech stocks. So let's take a look at Sofi's technicals, fundamentals, and financials so I can show you why I believe Sofi is going to end up somewhere between $10 and $13 a share in the next 6 to 12 months. Now, I just want to point out that I'm not a financial advisor and this is not financial advice. I'm just trying to help you guys understand the technicals, the fundamentals, and the strategies of how to manage positions better and to understand the market better. But it's ultimately up to you which stock you put your money in and how much of it you put into each position. Let's take a look at Sofi. The income statement, they started out total revenue 389 million all the way up to 871 million. Gross profit from 172 million all the way up to 571 million. So far, so good. I did this in one of my previous videos as well, but I'm going over it again in this video to show you guys exactly what we're looking at in Sofi. Operating income started out at negative 68.9 million. Now they're up to 306 million. Pre-tax income, very important metric, negative -95 million. Now they're at 51 million. Now this is their first quarter of profitability, true profitability. Net income, -95 million, and all the way across, it's all negative except the most recent quarter, 47 million, 47.91 million in pure profits, total net income. Now let's look at EBITDA, very important metric to look at, starting out at -$30.88 million. They've worked their way all the way up to $360 million. Now these are all great. It shows true profitability for SoFi. So let's take a look at another metric that I like even more, because net income and pre-tax income can be fudged around by a good CPA. I'm not saying that SoFi is doing that, but you very well could do it with a good CPA, with depreciation, write-offs, all different types of stuff. However, one metric, my favorite, that I like even more, cash flow. Let's go ahead and take a look at the cash flow for SoFi. Cash from operating activities, starting off at 11 million, all the way up to a whopping 215 million. Cash from investing activities, -1.01 billion, and now they're at -1.88 billion. So not so good from the investing activities. However, cash from financing activities started out at 297 million. Now they're up to 1.98, almost $2 billion. And my favorite metric to understand the overall picture, and in my opinion, the most important metric, free cash flow. They started out -13.92 million. Now they're up to 178.88 million. That is incredible growth for SoFi. We're going to look at SoFi on the charts, and we will see that there is a lot of support right here, even with tensions rising between Israel and Iran and the potential for a regional war. Crude oil prices being pretty volatile and going up and down, and the stock market correcting and slowly headed in a downward bearish kind of fear sentiment. You can see that SoFi has maintained plus $7 on this support line right here. In fact, there's some support at $7, $7.50, and some more at $9 and $9.50. But SoFi hasn't went down, and every time it does, it gets bought right back up. And the reason for that is the core fundamentals of SoFi, and the strength at $7 is a bargain. The fair value on SoFi right now from a lot of analysts is $9. Deutsche Bank gives a target price of $12. And even though SoFi is more profitable and has better cash flow numbers, a lot better than Robinhood, somehow Robinhood trades at $16 to $18 range, whereas SoFi is stuck in the $7 range. When we look at the earnings report, the previous earnings were reported at 0.2 cents or 2 cents per share. However, they were estimated to be at 0, so they beat the estimate. This quarter, they're estimated to be at 1 cent. If SoFi just matches the earnings, I feel like price is going to go north of $8 and stay there. It's going to settle in nicely around $8 or $8.50. Maybe a little bit less. Maybe it stays around the $8 range, but it's going to go above where it's at right now. If SoFi beats the estimate, let's say 3 cents, 4 cents, 5 cents, without a doubt, SoFi is going to go up. It's going to be parabolic. It's probably going to shoot all the way up to somewhere around the $9 or $10 range, maybe even 11. But I think what will happen is it'll head up in this direction, come back down and settle on a support of around $8.50 or $9. So right now, in my opinion, is the time to buy, because right now it's at a bargain and there really is only one spot left for SoFi to go, and that's up. Considering all in all, the previous earnings being beaten and the upcoming earnings being in the positive, SoFi is really not likely to go down. Even if they miss earnings by a little bit, I can't see them taking too much of a hit. I can't see SoFi going much below $6.50 or even $7. I think we're pretty much at a rock bottom right now. So I'm going to give you guys two options to get into SoFi. One is at a discount and one is a lot faster. Let's take a look at that. So if you want to get into SoFi at a discount, one of the best ways to do that is to sell puts. You can sell a put, go 1 week out, and you could sell a $7 put on SoFi. I don't see it going below $7. You can sell that put 1 week out. You know, the earnings is just after this put expires, so there's a little bit of volatility there, but you can collect a nice juicy premium of $14. And then if you get assigned, then your break-even price is $6.86, which I don't think is going to happen. You'll be able to collect that $15, then buy SoFi the following week or sell another put until you get assigned. But if the price skyrockets, goes parabolic on us, then you won't get assigned and you'll be stuck with some $28 worth of credits when you could have made several hundred possibly on the stock. So this is one way to get in. Another way to get in is to buy a call option, far out, like January 2025. We call that a leap option. And you can buy SoFi for $3 for $465. This is a $3 strike for $4.65 times 100 shares, $465. We could probably close this for about $450. And what you would do is you would sell call options weekly. So $450 is what it would cost. We could sell a call option against it once we purchase it. And we would sell $8 call option for $2 or $7.50 for $7. We can sell this week in and week out, $28 a month, 10 months, $280. And we bought that for $450. So we could make back $300 of that $450, meaning we only spent $150 for the contract. And since we bought a $3 contract for $4.50 or $450 for 100 shares, we made back pretty much $300. So we only have $150 in this contract. And if we exercise it for $3, $300 plus the $150 left over is $450. So we're getting SoFi for $4.50 at about the 10-month mark. In about 1 year, we're in it for less than $4. So you're getting a 50% discount. However, I recommend doing it the quicker way because the earnings is coming up, and that's just to buy the shares if you guys are comfortable with it, and then immediately selling covered calls, which you can roll out and up and keep collecting premium while the value of your shares go up. Over the next 2 or 3 earnings calls with SoFi, I can see the stock price going up to Deutsche's target of $12 and maybe even higher. If Robinhood markets can trade at $16 to $18, $12 and maybe even higher. If Robinhood markets can trade at $16 to $18, why can't SoFi? The question you shouldn't be asking yourself is, if I invest in SoFi and the stock price goes down $1 or $1.50, can I handle the $100 or $150 loss on 100 shares? The question you should be asking yourself is, if I don't invest right now before earnings, will I be okay with the fact that I left a 50% or even 100% return on the table in such a short amount of time? Thanks so much for being here, guys. Really appreciate you. If you guys enjoyed the channel, please subscribe, tap the bell. This way you guys know when I post new videos. Give me a thumbs up as it really helps the channel grow. And remember, until the next video, let's grow our wealth together. Take care, guys.